Hello, everyone. That's a fascinating what-if scenario. If the U.S. abandoned the U.S. dollar and officially adopted a cryptocurrency as its primary currency, the global economic system would be shaken in several ways. Because the U.S. dollar is currently the world's reserve currency and underpins international trade, finance, and global markets. Here's a structured breakdown. 1. Impact on the U.S. itself. Loss of monetary policy tools. The Federal Reserve would no longer control interest rates or the money supply in the traditional sense. This removes a critical tool for managing inflation, unemployment, and recessions. Taxation and traceability. Depending on whether the crypto is a public blockchain like Bitcoin or a U.S.-controlled central bank digital currency, CBDC, taxation and financial surveillance could become either more transparent or more difficult. Financial stability risks. Crypto is volatile. If the U.S. adopted a volatile coin, inflation-deflation swings could destabilize the economy. If it was a stable coin, it would need rock-solid reserves to maintain credibility. 2. Impact on global trade. De-dollarization acceleration. Countries that rely on the dollar, oil trade, commodities, international reserves, would scramble for alternatives. Some might adopt the U.S. crypto, others might pivot to the euro, yuan, or gold. Energy and commodity pricing. Oil, currently priced in USD, petrodollar, might shift pricing benchmarks. This would redistribute power among producers like OPEC, Russia, and China. Global contracts. Trillions of dollars in debt and trade contracts are dollar-denominated. Switching suddenly would trigger contract renegotiations, defaults, and legal disputes worldwide. 3. Impact on financial markets. Global reserve currency. Shock. Central banks currently hold approximately $7 trillion in USD reserves. If the dollar was abandoned, they would dump those holdings, triggering currency chaos and a possible global recession. Crypto market explosion. The value of whichever crypto the U.S. adopted would skyrocket in usage, but volatility and speculation could overwhelm the system. Banking system upheaval. Traditional banks, credit systems, and SWIFT payments would need a massive overhaul. Fintech and blockchain-based banking would surge. 4. Geopolitical consequences. Shift in power, U.S. global financial leverage, sanctions, SWIFT access, dollar dominance would erode. Countries like China, Russia, India, or even regional blocs could gain influence. Sanctions weakening. The U.S. uses dollar dominance to enforce sanctions. If trade settles in crypto, enforcement becomes much harder. Crypto arms race. Other major economies would accelerate their own CBDC development to avoid U.S. dominance in a new crypto-based financial system. 5. Everyday effects for people. U.S. citizens, higher volatility in wages, savings, and pensions unless the crypto is fully stable. Banking and credit card systems would be rebuilt around blockchain. Global citizens. Payments could become cheaper and faster, but instability in value could make international trade and remittances harder. Black markets. If the U.S. chose a transparent, state-controlled blockchain, illicit transactions would shrink. If it chose a private one, black market activity could thrive. There are two scenarios we need to explore. That way, we can see how drastically the outcomes differ. Option 1, U.S. adopts Bitcoin or another decentralized crypto, which is volatile, no central control. Option 2, U.S. adopts a government-backed crypto, CBDC, which is stable but tightly controlled. Let's break down the two scenarios. In scenario 1, U.S. adopts Bitcoin or another decentralized crypto. It's a public blockchain, outside government control, limited supply. What are the economic effects of extreme volatility? Wages, pensions, and savings would fluctuate daily with Bitcoin's market price. No monetary policy. The U.S. couldn't print money in crises like COVID stimulus. Recessions would be harsher, unemployment harder to manage. Deflationary pressure. Since Bitcoin has a capped supply, 21 million, prices of goods would tend to fall over time. Sounds good, but it discourages spending and causes economic slowdown. Global effects. Chaos in trade. Importers/exporters would face unpredictable costs. Oil contracts, loans, and international trade deals would need rewriting. Central banks reject it. Most countries wouldn't store Bitcoin as reserves. It's too volatile. They'd shift to euros, yuan, or gold. Weaker U.S. influence. Sanctions and dollar dominance vanish. U.S. loses one of its strongest geopolitical tools. Effect in everyday life. Banking. Credit and loans become tricky. How to calculate interest when currency swings wildly. Speculation economy. Ordinary people become involuntary crypto traders just to live. The outcome of this is global shock, U.S. financial instability, weakening U.S. global power, probably unsustainable in the long run. In scenario 2, U.S. adopts a U.S. crypto dollar, CBDC. Nature. Government-backed, pegged one-to-one with today's USD, blockchain-based but controlled by the Federal Reserve. Economic effects. Stability. Dollar remains stable because it's pegged, but transactions are faster and cheaper. Monetary policy survives. Fed can still adjust supply digitally. Interest rates still possible. Banking revolution. Commercial banks lose relevance since people can hold digital wallets directly with the Federal Reserve. Global effects. Dollar dominance continues. Other countries may resist, but since it's stable, many will keep using it. Stronger financial control. Sanctions, taxation, and surveillance become easier because blockchain records everything. Global competition. China's digital yuan, EU's digital euro, and others would accelerate to avoid U.S. dominance 2.0. Effect in everyday life. There will be faster payments. International transfers take seconds, not days. There will be cheaper finance. Lower fees for remittances and small businesses. Less privacy. Government could track every single transaction. The outcome is smooth transition if managed carefully. U.S. keeps global influence, but sparks a digital currency arms race worldwide. Comparison in a nutshell. Bitcoin adoption equals chaos, loss of U.S. power, unstable economy. CBDC adoption equals continuity, stronger U.S. control, but global rivals push back with their own digital currencies,